Hey, how's everybody doing? Forbearance or not to forbearance, that's what we're going to talk about. It's going to be a really short conversation. It's not going to be something that gets long and drawn out and wonky. So you don't have to worry about that. Let's talk a little bit about mortgage forbearance, right? So let's get real. The 50% of Americans in a recent survey look at this pandemic as a major threat to their financial health. Rightfully so. I mean, that should kind of be like a duh thing, right? So in response, what the government did was the CARES Act. That was one of the primary responses. The CARES Act has in it a mechanism for mortgage forbearance. All right, so it is really, really important that you understand what. Excuse me while I scratch my COVID gruff. I'm not used to this right now. But it's really, really important that you understand what forbearance is, what the benefits are, what the risks are, and what you should be looking out for when it comes down to whether or not you're going to make this decision. All right. So the biggest thing to understand is what is mortgage forbearance. So it's a great question, and it's not well defined for everybody, so which means that all mortgage companies can do it a little differently. So it can either be a reduced payment, it can be a skipped payment, or it can be an elimination of a payment, but it's not free money, and this is where you can get yourself into a lot of trouble, all right? So forbearance is a great program and a great opportunity if you are experiencing a financial hardship. By all means, it's there to be used for exactly that purpose. But if you are not experiencing a financial hardship, it's actually going to introduce risk into your situation if you try to use it. All right, so here's basically the three things that you need to think about is what happens on the end of the forbearance period, and we'll talk more about that. What do you need to talk to your mortgage company about? Like, how do you get into the forbearance program? We're going to talk about that. And then what are the impacts to your credit, right? You're literally not paying your mortgage. So welcome to my life in my home office. Do you hear Lily over there? Yeah, those are the three things we're going to talk about. So let's talk about what it is. So the three ways basically that you can expect to experience it is that you will get to pay no mortgage payment for up to 360 days. The way that CARES Act actually says it is 180 days with a 180-day extension. So you can get 180 days and then ask for another 180 days. So you're either going to pay no mortgage payment or you're going to pay a reduced mortgage payment, okay? So that's your two basic ways that forbearance is going to be experienced. How do you get it? You call your mortgage company and you just ask them. You tell them. They're going to ask you, what is the financial hardship that you're experiencing? And you're going to explain that to them, and then they're going to tell you what their terms are. The first question you need to ask, if they don't tell you right up front, is how do you pay it back? Because it's not free money. Some mortgage companies are going to ask for a balloon payment, which means you are going to have to pay everything that you've missed. You're going to have to pay it as soon as your forbearance period is done. So that's called a balloon payment. Another option is that they're going to spread it out over the course of several future payments, right? So let's say your mortgage payment is $1,200 a month. You get a forbearance of a reduced payment to $600 a month for a year. Well, then you can expect that if the repayment period is another year, that your payment is going to go up to $1,800 a month for a year until you repay it. So the reduced and then the spread out payment, or they might just take all those payments and tack them on to the end of your mortgage. So where your mortgage may have you may have paid off your mortgage on January 1st of 2030. Now you're going to have to tag on another 6 or 12 months or whatever that was for your forbearance, okay? So understand this isn't free money, and understand what the financial implications are to your family and your financial situation on the payback period, because you could be thinking this is a really great opportunity to give yourself a break, and what you're actually doing is creating a huge problem for yourself at the end of the forbearance period. So make sure you ask those questions. Okay, so let's talk about what you need to engage your mortgage company about. So you've got basically you're going to ask them for forbearance, you're going to explain your hardship, and then you need to be proactive about asking that what next question and document everything. Make sure you document everything. Keep a file. And I would go so far as to say they're probably going to have an info email or a customer service email contact once you get engaged. If you're having a phone call, type up the comments that your notes from your phone call and send it to them and say, hey, I just had a phone call with Ruth at the forbearance department. These are my notes. I just wanted to make sure that I got it right so that you can document it. Because this is what you can expect. There is a part of the CARES Act that specifically says that mortgage companies have to report your mortgage as current. This right here is a This right here is a snapshot of a credit report from just a couple of weeks ago for somebody who was in forbearance with their mortgage. Where I've got this circled right here, it's kind of hard to see right here, right? That is this mortgage being reported as a late mortgage. That's a 30-day late payment, which will really play havoc on your credit score and on your ability to access credit in the future when everything's said and done. Now, it says down here, mortgage is in forbearance, which is great. But what people see when they pull your credit is late mortgage payments. So it doesn't matter what the CARES Act says. What matters is what they're doing. Now, you could fight that, sure, but have you ever tried to fix something on a credit report? I mean, come on. Okay, so credit, how is it going to impact your credit? As we just saw, even though the CARES Act specifically puts in place some boundaries to help protect people from negative credit impacts if they're in forbearance as a result of the COVID-19 pandemic, you can see this is a real world example. I didn't mock this up. So you just need to put in your mind that if you engage in the forbearance, which if you need it, use it. Absolutely. But if you do it, you need to understand that there are going to be, most likely there's going to be credit issues and there's going to be some negative implications on your credit score. Okay. So there you go. If you've got any questions, please comment below. I'll follow up with everybody. And I look forward to helping everybody in this time of crisis. Remember that this is where we get to pull together. Just because we're isolated to keep the spread down does not mean we have to be alone. So reach out to somebody today. Make a phone call, send a text, and develop community and tighten your friendships and your relationships. Okay? We'll see you again on the next one. Bye-bye.